Hello, everyone. Good afternoon.
Gonzalo.
Assalamu alaikum wa rahmatullahi wa barakatuh. I am delighted to be here today at this new STF talk. Today, we have a new, very interesting session entitled Islamic FinTech and Trade Finance, Challenges and Opportunities in Africa. In this session, we will try to explore major trends in the African FinTech space and how Islamic FinTech fit in, address challenges, and highlight opportunities. Before we start, I would like to present once again our center, the CF. The Saudi Spanish Center for Islamic Economics and Finance was launched in 2009 and is a hub for research, teaching, applying, and promoting Islamic economics and finance. The center leverages from the experience of its partners, the King Abdulaziz University and IE University. And we have two main headquarters, one in Jeddah, in Saudi Arabia, and one in Madrid, in Spain. Let me now introduce our speaker today, Mr. Max Ateba. Mr. Max Ateba is an associate partner at Dalberg, where he co-leads the finance and investment practice. He has over 15 years of experience across banking and management consulting, with a focus on investment, trade finance, and partnerships. His areas of expertise include strategy, impact investing, and monitoring and evaluation across healthcare, Islamic trade finance, and fintech. He's passionate about challenges at the intersection of capital, technology, and social impact. He was previously an engagement manager at Monitor Deloitte, leading M&A and PPP projects. Prior to that, Mr. Ateba was a banker at JP Morgan, where he was responsible for due diligence and partnerships management for several funds, including Microvest, Novastar, and JP Morgan's Global Health Investment Fund. Prior to that, he was at Columbia Center of Sustainable Investment, where he led teams designing monitoring and evaluation frameworks for various sovereign wealth funds in Africa and Southwest Asia. Before joining Dalberg, he was Director of Finance and Investor Relations at Ovamba, an award-winning fintech focused on trade and Islamic finance in Africa and South Asia. Max holds an MBA from St. John's University, MSc in Development Economic, and a Bachelor in Economics with honors from the Pontifical Gregorian University in Rome, Italy. Thank you very much, Max, for joining us today. It's a real honor. And let's start. The floor is yours. So whenever you want to start, we can do it.
Thank you very much, Gonzalo. It's a real pleasure to be here. Actually, an honor for me. For anyone, maybe for everyone's interest, how we, Gonzalo and I know each other is, by virtue of a shared passion for fintech and Islamic finance. And, we first met at, in Tashkent, actually on the way to Tashkent for the Islamic Development Bank annual conference, annual meetings. So we started having conversations there, and lo and below, at the time I was director of finance and investor relations at Ovamba, as I said before. Gonzalo had actually taught a case on Ovamba, so he was actually one of the few people that I had met in person that knew of Ovamba so well. So he gave me really, deep pleasure, maybe at a personal level, and at the bigger or broader level, it was more about African fintechs that are in the Islamic finance space that weren't necessarily or aren't necessarily known, whether it's here in the US or in Europe. So Gonzalo, I appreciate what you do and what the center, the SCIF does to advance the positioning of Islamic finance and fintech around the world, and especially putting African businesses and economies and small businesses on the map. So thank you for doing that. I'm going to present, so if you give me a minute, just a short minute now, I'll get to that. Bear with me here. And if you could give me a thumbs up or just a yay when you could see my screen, that'd be good. So I know I'm not talking to myself.
Sure. Now it's working.
Okay, fantastic. Thank you. So as the title says, today we'll cover more specifically Islamic FinTech and trade finance, and then we'll get into challenges and opportunities for Africa. As you can see, right, like this, you know, and as I'm trying to survey the room, see if there's enough context, or people may have enough context about Islamic finance, so I don't have to cover any of that. Full disclosure, I'm not an expert in Islamic finance. I dabble in it. I probably consider myself more of a pro in like the trade finance space. Maybe if you have questions on more technical questions on the Islamic finance side of things, Gonzalo, I may have to tap on your shoulder here. All right, so we'll cover three main points today. The first one's going to be the trends on Islamic finance, actually global Islamic FinTech. So what the role that this specific sector plays in global economics and in the global economy, and look at some of the trends and drivers. Then we'll maybe do a spotlight on Africa and highlight some of the opportunities and challenges. And lastly, we'll stop and maybe explore some opportunities to use the AFCTFA to deploy or use some of the technology or some of the resources that trade finance and fintech, especially from an Islamic perspective, offer. So, and this is more of a snapshot, right? Like, and I start here really just to give everyone a little bit of context. I'm often actually before I get here, and I hope not everyone got to see it. If someone could just drop a note in the chat and tell me, what do you think the total size of trade finance or trade finance is on a yearly basis? And I'll type the question in there. I probably could have had a poll for it, but. I see 800 billion, that's interesting. I see 500. See almost $1 trillion there. Actually, that's 8 trillion, I see. I'll take maybe a few more. Just an educated guess. It's you're not being graded on this question.
You mean only in Africa or in?
Or globally?
Globally. Wow, I have no idea.
It's a good one. So I'll save us some time. As of 2021, it was actually $17 trillion with a T. So essentially 17 million billion. So quite sizable, and maybe the size of multiple economies combined. We don't necessarily think about it often, like very few of us do, yet all that you touch and all that we actually buy and sell not all, but most of it goes through trade finance. This trade in general. Maybe at the national level, you don't have to deal with a heavy or an insane amount of imported or exported goods. But really, yep, 17 trillion. So yeah, 17,000 billion, exactly, Olivia. All right, so So here we are, right? And what you're going to see here, right? It's more so at the from an Islamic the Islamic component of it. So here you have essentially Islamic finance taking 3 trillion out of the 17, and that's fairly quite well aligned with the rest of the demographic and the data. So if you think about the fact that roughly a little under 20% of the world population is Muslim, and historically and culturally, the Muslim people are actually more inclined to engage in trade than maybe some other parts of the world, or some other culture, I should say. Right. So I'm not going to bore you by reading what's on the left hand side there, but really just to point out, the jump between in terms of projections, and it's really not that much of a jump because we're going from 2018 to 2024, but we're predicting roughly 3.5 trillion by 2024. So, a couple of pointers here. One is that Islamic finance is the fastest growing segment of global finance, period. And that is driven by fintech. So whether you like it or not, fintech is an important part of our economies, globally and at the national level. Now I pay a bit more attention to Islamic trade finance in terms of what it represents as far as opportunities are concerned for populations in the world that don't have alternatives, right? And by that I mean, as a Muslim practitioner, there are certain rules, and especially the Sharia, or not especially, precisely the Sharia law, that prohibit you from engaging in certain types of business practices. So it's important to have an avenue to be able to transact in a way that sits well with your faith and the practice of your faith. So, and maybe one last point there, it's, the Muslim population is the second biggest group or largest religious group behind the Christians. So now let's take a highlight. I may disappoint some people here that are used to seeing all the unicorns, all the African unicorns, and the $200 million being raised here and there. So here I'm going to talk about. I'm going to focus more on the Islamic part of things, as I said before. So, and I would invite you to look at this from two perspectives, or maybe two lenses. On one end, you should think about traditional banks and how they operate, and essentially, a bulk of the trade finance is done by banks, a good 60 to 80% of it, right? Yet, trade finance is a growing business around the world, but really, we have a 16% growth, 16% reduction in the engagement from banks on the continent. That's pretty significant, right? And in the process, right, like in 2020, and now we have essentially a good 40 plus countries that have ratified the African Continental Free Trade Agreement, which allows for the flow, a free flow of goods and people throughout the continent. So you're having that dynamic whereby people and goods are going to be, free floating around the continent, but at the same time, you have banks that are engaging less and less in trade financing. So you're going to need to come up with solutions. One of the key points there I wanted to share with you is, 1 in 4. So first of all, it's 50% of the trade finance applications that are rejected. So every other person that applies, every other business that applies for a trade finance transaction or opportunity gets denied. In Africa, that is, not globally. This is specifically in Africa. And the main reasons that they cite are KYL, KYC, AML, so know your customer, anti-money laundering, so identifying who the transaction initiator and whatnot are. So that is very limiting in an environment or context where ideas are actually not given. I think you could be sitting in DC or New York or Madrid or or Jeddah and thinking, all it takes is to go to the DMV or to some public office, and within maybe a few minutes or an hour, you walk out with an idea. That's not always the case. That's actually it's not that simple. So the alternative for businesses is actually to go and resort to anything they could find, including predatory lenders. So people that apply, rates that are in the teens, if not hundreds. So I mean, you have 100-200% interest rate, which in itself actually precludes Muslim practitioners from engaging, right? So there are already a couple of challenges there from a purely business perspective. Now, from a religious and ethical perspective, you have even more challenges. So, to me, and for some of us, this represents a perfect opportunity with a sizable market, whereby you can provide better access to capital and even beyond that, access to markets. Access to capital by providing opportunities to those that may not be able to be served, to those that traditional financial institutions are not willing or able to serve. You provide options for them. In a similar fashion, right? You have the high wave of Islamic FinTech that's kind of been done. It has been seen more so in Southeast Asia and the Middle East, and to some extent Europe. We haven't seen that in Africa, and many are predicting that the second wave of what happened in Malaysia, in Indonesia, in Singapore, for that matter, over the last couple of years, is bound to happen in Africa. So that remains to be seen. Now, the third element I want to point out to you is the fact that small businesses, and we talk about micro, small, and medium enterprises, are truly the backbone of the African economy. Whether you take it at the country or national level, or you take it at a continental level, there are small and micro, small, and medium enterprises essentially are what makes keep the world going. Yet, on top of that, in Sub-Saharan Africa, for example, they employ over 60% of the workforce. So, if you think of that and what that means in terms of creating, mobility opportunities, opportunities and options for people to earn a living, to take care of the family, and take care of, provide for themselves and others. It's a sizable sector. It's unfortunate that financing is one of the biggest challenges. So, and we talk about gaps in mismatches. So it's not just the lack of finance. Sometimes it's the type of credit or the type of financing that is inadequate, and most of it is due to, as I said before, identification. So AML, KYC, but also the perception that the borrower or the person looking to get some trade financing is a risky borrower or risky business, right? So, and I mentioned before, African Muslims are often reluctant to even engage in this. This is not the way they think of conducting business. I'll pause there to see if there are any questions. So, I'm not checking the chat, but any questions? I know we'll have a question Q&A at the end.
We can let the questions for the end if you want. Okay.
Sounds good. Thank you, Gonzalo. Yeah, so we'll dive a bit, dig a bit deeper into challenges and opportunities. And I've tried to not cover some of the things that are fairly commonplace. I wanted to maybe spend more time on what's a bit different, and this is based on not just my research, but also my time at Uvamba, which is actually one of the leading fintech in the Islamic, one of the leading Islamic trade fintech on the continent, even though, to be frank, and anyone else at November will tell you this, the business or the tool or the algorithm wasn't designed initially to be Islamic. It kind of happened by accident. And then over time, it got refined to make sure that it's Sharia compliant and whatnot. So I'm going to start with the challenges and follow up with the opportunities. But really, what I want to point out to you is the red boxes that are actually within the yellow or orange, I should say, the orange squares and boxes there. And on the far right, you have Sub-Saharan Africa, and then right next to it, you have the Middle East and North Africa, which include the Gulf Coast countries. So if you look at where they have gaps, and first of all, when I first saw this, what I noticed was the fact that there are only 7 fintechs in Sub-Saharan Africa, Islamic FinTech, sorry. There are only 7 Islamic FinTechs in Sub-Saharan Africa. This is a continent of over 440 million Muslims, yet there are only 7 fintechs. And then you obviously you have the 12 that are in the Middle East and North Africa, portion. But that's nothing compared to, say, Southeast Asia, another region that I've spent a lot of time covering, whether as a banker or as a consultant, right? And the population, one would say, are fairly similar in terms of size, but that's a big delta. You go from 62 to, even if you combine it, it's still at 19. So we're not, obviously there's a gap there. And I also want to point your attention to, and I don't know how well you could see this. I suspect it may not be. Sorry about that. So a couple of the solutions that are being presented here, right? Like you have payments. That's a clear and simple one. And then you have capital markets, but I'll leave that alone. I'll start with alternative finance because that's a fair amount of what we're going to cover here. So if you take just those 2, you actually hit about, well, we talk about 77% here, but if you take just those 2, that's about 50% of the needs. So you don't need to cover all of the other solutions here to be able to serve the populations. So challenges. So one of the first or the biggest challenges is actually the fact that it's really not the Islamic fintech ecosystem is not mature. It's really still in its infancy. So unlike some of the other regions, there's a unhealthy level of disparate activity. So if you're in Nigeria or in Morocco or Egypt, you tend to operate within only that national or even regional within that country, regional ecosystem. There's very little interaction or even integration. So that's one of the biggest challenges. The second one is actually the lack of proper documentation for now we go from the provider to the user. And I've suggested some takes there, right? Like the things you could do to address some of these challenges. But in terms of proper documentation, every time I've seen it and come across someone that raises that as an issue, I think of it on the flip side as an opportunity to actually engage in a digital ID and use that to start something that's even more reliable and less cost intensive and also pretty user friendly. Last but not least is the regulatory environment, and this is not, Africa is not alone in this situation. Everyone, even in the US, we're still trying to figure out how do you regulate fintechs, especially those that are more specific to, in this case we have Sharia law. Like how do you make sure that you have the proper settings, the proper tools, but also the proper entities to not just regulate but also advise and make sure that the enforcement is there. So a good, one of the good practices, something that even I've personally engaged in is the regulatory sandboxes as solution. So it's not perfect, and some countries actually at times allow them or create them, but then shut them down So I would probably share this with the word of caution, right? It's not perfect. In terms of opportunities, these are fairly, I think the payment part is self-explanatory. It's usually the entry point, easy entry point, relatively easier to integrate. Yet you still have to look into the legal and Sharia components of the other parties that you will be integrating with. The second one, which is one of my favorites, actually alternative finance. And I chose one specific part of it here, which is crowdfunding, because it still remains a healthy and attractive way to get funding into the hands of entrepreneurs and businesses. Now, one that I've been really exploring a bit more in the past couple of years is open banking. And the idea here is you create you create a technology that allows you and the customers to tap into the existing financial system or financial network. So, with your transaction, for example, a cash flow from registered transactions, cash flow statements and whatnot actually hit the bank, the bank information or communication system, and it starts creating a ledger, right? So I think some of the people are actually more excited about it and thinking, blockchain and all the more sophisticated solutions apply to this. I think I have open banking there twice, but really it's open network it's open banking from a network perspective. So again, using it's the same solution in short. I'm not sure why I have it twice. Now, in terms of the last one, which is innovative credit, the idea here is that, well, it's also a challenge. In sub-Saharan Africa, like many other parts of the emerging markets, you don't have an existing and established credit scoring system. So a mechanism or process or systems of tools that allows a lender or decision maker at the financing mechanism or financing institution to determine if it makes sense to partner or to fund a business or initiative. So here you have an opportunity to not only make decisions for yourself, to make the decision-making process easier and clearer to yourself and as an entity and for your team, but also on the flip side, you actually could use that to help the customers and the users build credit or establish credit. Now, what I've seen so far on the continent is it's still fairly isolated and it's very siloed. People do it with leasing equipment, whether it's a motorcycle. I know in Uganda, we call them boda boda. They have all different kinds of names, and then people use it with taxis. So the principle is that you get to screen someone before they start using this equipment. So whether it's a car or motorcycle for public transportation, quote unquote, and over time they pay back, right? Like they pay on a weekly basis, they get their own share, and then over a certain amount of time, 2-3 years, they get to own the asset. I think this is a very interesting application for Islamic finance. I would love to see more of it done across the continent and across the world. Not sure what that is about, but bear with me. I think I lost my presentation, but should be back. All right, give me a moment. I'll get back here in a second.
Don't worry.
All right. Let me know when you could see my screen. And apologies for that.
Not yet. No. Yeah. Perfect.
Okay, thank you. Can't seem to navigate. Oh, there you go. I have to do it manually. All right. So, and to dig deep onto so I'm going to focus more maybe on the MSMEs here, right? To make a case for why we can use Islamic finance and technology to solve a really significant problem, but also even if you think of it from a business savvy perspective, or profit maximizing perspective, or value creation, not necessarily profit maximizing. Sorry, this is my malformation from the Western system. You have, right, we talked about over 50% of the trade being managed, or about 50% of it being done by MSMEs. Yet we also talked about, well, about 60%, 64% of it, 50% of it is done by MSMEs. They account for, they're responsible for roughly 64% of the labor. Yet they have a $330 billion gap in financing. That is significant by any measure. And we looked at what the number was globally before, and this is what it means in terms of, to me, this is a missed opportunity, not just for the businesses themselves, but also for the different trading partners, or the potential trading partners that could be benefiting from these goods, from the partnerships, from engaging with these small, medium, micro, small and medium enterprises. So, and here is a potential solution, and I hope you could see clearly here. It's a bit cut off. And the idea here is to have more of an ecosystem solution, right? And this is not, just to be fully transparent, I did not create this, but I found it, and I think it's a really comprehensive chart, from the folks at Bain. And it gives you, it shows you the different value, parts of the value chain when it comes to a transaction or trade finance transaction. So you have the pre-transaction, what needs to happen there, and then you have the transaction processing component itself, which is where bulk of the activity is done, and then the post-transaction. Now, I would probably point your attention or call your attention to the left-hand side, where you have the technologies that could truly make a difference here. And I chose one simple use case that anyone could relate to, and it's the process itself. Anyone, I suspect most of the people in this call have dealt with or are familiar with trade financing. 60% of the cost is actually justified by paperwork, as in a bank needs to verify that you've actually acquired the goods. That document needs to be notarized. The document that your bank is sending to the correspondent bank also needs to be notarized. So there's a lot of paperwork going around, and unfortunately, that's still the case today in many parts of the world. So if you're able to do, whether it's being able to, and Ovamba, for example, has the optical character recognition technology. Some of the AI could be done. Some people are actually already using AI. Then advanced analytics to start, and machine learning for that matter, to start recognizing patterns and reducing the amount of manual operations that need to actually be involved in whether it's the processing or the pre-processing of the transaction, and then the Internet of Things and all of these different technologies can help in various ways. And these, right, like the average day, the average length, and I don't have it here, the average length for the average trade transaction in Africa is 20 days. That's before the good actually get on the ship. It's not about it living. It's from the first time you take it from your office or from your business to the port, right? 20 days. That is a lot of time. And with some of this technology, some players, and I'm not advertising for, I'm not getting paid by Obama to talk about this, but some of the players in this space already, are able to reduce those 20 days down to 2 to 3 days. And there's no reason why it shouldn't be done in just about a day. So think about the time reduction, the cost, the time saving, the cost savings of going from 20 days to 3 days or even 2 days. That benefits everyone, including the banks. And obviously, the banks are not exactly the biggest fan of they're not exactly the closest or the best players in this space. And once you reduce the amount of time to process the transaction, you could actually also scale much more rapidly, and you could also scale more expansively with more scope. If I could so say. And right, like, yes, we don't. This is something that's relatively new, 2 to 3 years. And some of it, I think this one's actually led by IBM. But the idea is to create a marketplace or an ecosystem. And I chose the European example because I figured most of the audience is going to be either in Europe or would have some kind of connection to Europe, by virtue of the CIF and IE, but also by virtue of the central location of Europe, when it comes to trade. This is a group of 9 banks. It doesn't have to be banks, by the way. So you have 9 banks. It's built on the IBM Hyperledger fabric, and the way they operate is essentially the in a joint venture approach. So the company or the platform has a license that everyone uses. Now, even WeTrade they have their own limits, but this has been working since 2018. It's actually one of the best use cases. But there are examples in Asia, actually a couple of examples in Asia, one that covers Asia and the Middle East. So I think that's really pretty attractive. And I'm saying that to point that there's none that actually puts Africa at the core of the transaction. So that's not been done yet. It hasn't been started. I see no reason why it shouldn't get started by someone on this call or people that we're involved with or engaged with. So I think a part of it was also to say these are not just theoretical thoughts and research on paper. These are things that large companies that we all know, like large businesses that we all know, are already engaged in. And that's it in terms of what I meant to share. I will take any questions that may come through the channel.
Thank you very much, Max. Thank you. For me, it's clear that Africa has huge potential for growth in Islamic banking due to large Muslim population, a low starting base, and growing government interest in the sector, and probably FinTech it would be the key to make this a reality. We in the center we have studied several times Africa, especially North Africa, because we are much more near this part of Africa. And also, just you to know, we have developed some different challenges in partnership with the Islamic Development Bank. And in our last competition, in our last challenge, which is about to finish next month with a big gala event at IE University in Madrid, we have received a lot of different solutions regarding FinTech, few of them from Africa. And we have realized that there are a huge potential in Africa and a lot of talent entrepreneurs with great ideas. I remember some of them regarding credit scoring and trying to reduce the paperwork, as you have said. No? But it's true that there's a lot of things to do. In terms of, because one of the problems I see is that Africa is very big. So we cannot reduce Africa as a whole, as a unity. Where do you think what do you think would be the best hub for Africa to start a kind of hub for fintech or Islamic fintechs, if there is any?
Right. That's a really good question, Gonzalo. So, and maybe for the sake of everyone else that's on the call, a lot of the other prominent networks have been developed around hubs. Like there's the Southeast Asian hub that's actually built with Malaysia, at the core of it, and then you have Jeddah and whatnot. So if I would put a couple of parameters to it. If you're trying to build a hub whereby you have solutions that could go to market and are integrated in the short to medium run, I would probably recommend somewhere like Egypt. It's a burgeoning hub, and you have people that have been here in the Silicon Valley and have spent time whether it's Jeddah in Southeast Asia. So they've done this before, and the guys and ladies out there are truly and intentionally trying to build, develop a hub. So that's for, if you're looking for immediate results and quick wins and something that you could build upon going forward. That said, I would probably go against that conventional thinking and say we need to focus on where you have high demand and to some extent latent capabilities. And by that, I mean a Muslim community that is fairly well ingrained in Sharia compliance trade. And therefore, all you may need is the technology component that's designed for trade finance or for fintech, versus trying to design a product that, and part of it is also, it has to be a solid, sound, fintech solution that is compliant with Sharia. But you have to, one comes before the other. And I know, this is controversial, but in my experience, the technology comes first, and then the application and the rules and whatnot come after. So I could offer maybe a second hub in that case, and I'd probably put it around Senegal, because you have, it's a majority Muslim country, and then you have the neighboring countries. And also you have the fact that they're part of the ECOWAS, so which is a regional economic and financial group or union. So now you're actually truly almost forced to create a network, versus a country that may not be part of a group like that. And even though they may have a majority Muslim nation, it may be tricky. Last but not least, maybe third, right? Like that's a bonus. It's the usual suspect. It's Nigeria. We have, a heavily populated country, majority Muslim, fairly well versed in finance, also fairly well, good observance, when it comes to Islam and Sharia. So, and you and I have worked with some of them. You and I have run into meetings and have been on panels with them. So, right, like that could be the third in my view, and maybe that's more on the easier, path of least resistance option.
Yeah, Nigeria, of course, is the great market, and we know that. We have studied a lot of Nigeria, and we know some of the banks there, and also we have studied a lot the North Africa, and there's something that we call the Magrep Paradox. I don't know if you have heard this title, and is that we have identified some drivers for fintech to emerge, like young population, digital-oriented population, relatively low financial inclusion, and high level of remittances with high transfer cost, which is good for developed fintech in the countries. We are talking about Morocco, Algeria, Tunisia, but also we have identified some factors against FinTech, which is the internet quality and availability of the internet in those countries, the preference of cash, the structure of the financial markets, and also, of course, the legal and regulatory framework. I don't know if you think this is happening in the whole country or not. I mean, not in the country, in Africa.
Right. Really good question. So what happens in the Maghreb is maybe exacerbated or accelerated compared to some of the other regions. And I'm saying it with maybe a focus on Islamic finance and fintech. So most of Africa, as we speak today, well, Africa is one of the continents that's most impacted by remittances, as in remittances are actually higher or more important than foreign aid and foreign direct investment, right? Like the only other continent that has that feature is Asia. That said, if you look at the Maghreb, we have the fluidity or the ease of migration patterns, or even historically longer migration patterns towards Europe and going, even coming to the United States. So and what those population that migrated, some years back, some decades back, or generations back, and some actually go to the Middle and Far East, near and Middle East, I should say. Right, so there's remittances play an important role, but I would say that it's fairly common across the continent. It's just the size or the impact of the relevance in proportions. Now, when it comes to generational, like the youth, right? The youth is actually fairly common. That's everywhere on the continent. It varies from country to country, but the whole, Africa is a very young continent. Now, that could be an asset, and it could quickly turn into a liability. And I think when it comes to fintech, you talked about the generational integration, right? Like that's something that Africa is probably using now, whereby a teenager or someone in their 20s is helping a parent maybe receive funds or transfer money left and right, or transact is the proper term, without having to have the knowledge required to do that transaction on their own. Now, so you have an entire generation that doesn't need to be tech savvy, that's seamlessly or symbiotically working with a generation that's more tech savvy and comfortable sharing that knowledge, or at least transacting on behalf of the other. The problem comes in when we go from consumption patterns to investment patterns. The one transacting is not always the one that actually has the power to spend the money. So, and there's often a lag there, and you could see in a country where, and there are studies about this, and one of them is probably, if I'm not mistaken, by MIT. If the funds are coming, I think one of the countries was actually Senegal. If the funds are coming to, let's say, the grandma, the grandparent that didn't go to school, doesn't know how to use the phone to get to receive the funds and whatnot, but there's a grandson or even a child that could process the transaction, right? From that point on, there's little traceability to what happens with the funds. Now, if you're thinking about it from an investment perspective and a growth perspective, or trade finance perspective, that's the end of that transaction. It doesn't help you much. You just see that money came in, and it's probably, the assumption oftentimes is that the money is going to be used for consumption. We need to tweak that and start looking at what proportion of it goes into investment. And there's not enough data to say, to point in any direction right now. So a lot of it is still just assumptions. We still need to do some digging. I hope I answered the question, and if I didn't, let me know if I could add to what I missed.
Okay. Yeah, and we have some questions here and some people that want to talk. Dr. Kalim said, you mentioned there was little interaction or integration. Did you mean with conventional finance or with people? And why is this? And what is the solution?
Oh, that's Doctor, you're getting a 3-for-1 here. um, it's both the conventional and the non-conventional, but more importantly with the conventional, there's very little integration between fintechs, whether it's Islamic fintech or not, and I'll add trade techs to it. But that's the direction that we're all trying to go, or something we're all trying to encourage. But it has to make sense to banks, and banks are not exactly the way they're set up today, and especially in Africa, they're not designed and don't have the proper tool to be nimble enough to assess risk the way that a fintech could do today. So what happens then is they're saying, well, I need to trust you, but I'm going to need some kind of collateral. And so you still, and that's still the burden, right? Like the burden is we still have a not sufficiently sophisticated system that is almost full of barriers at the center of everything. I wish we didn't have that. Now, on your second question, with people, right? Like on the people side is more so on, this is a business of trust, right? Like a part of why trade finance is so expensive is because everyone that's involved needs to make sure that they could trust the other person. So whether it's you getting a notary, whether it's you buying insurance or getting a letter of credit and whatnot, all of that is just to assess the trustworthiness of the other person or ensure that they're trustworthy. So the people element is still there. If you think about how you operate, maybe I want to say somewhere between like Europe and the US, you don't concern yourself with whether the person that paid you is their credit card, the debit card is going to clear. You have no concerns on that front, right? Like the minute they swipe or tap the card, you got paid, even if it may take a day or two and you may pay 3% or however much you pay for it. It's just that trust factor that's there that you may not have almost instantly on the continent yet. And that's something that needs to be built into the solutions. And I guess I answered the part of like, what is the solution? Part of it is, so there's a risk sharing component, and I like to say risk sharing and profit sharing as well, or reward sharing, right? So that's at the core of Islamic finance, and I think that should be celebrated and also commonplace. It's hard when you have two systems that are trying to go hand in hand. The system where everyone is trying to transfer risk, right? Like, and people they talk about de-risking. There's no such thing as de-risking. There's simply risk allocation. And you could share it with someone else, it becomes more burdensome for them. It doesn't mean it's less risky, it's just less burdensome to you. So, and that's part of what we need to solve for. And fintech and blockchain are really, really good for this, right? Like if you're able to, like in the US, for example, in Europe, you have like a credit score. How do you get a credit score? It's just by transacting, after a certain amount of time, and someone could see that, you've been trusted with less money, maybe $1,000 or whatever the number is. And over time, you've paid in time, you haven't defaulted. And before you know, you are trusted with a lot more money than you started with. When you don't have a system that allows for that, it's almost impossible to actually get trust, aka to get capital, to build a business, to scale a business, or to transact effectively.
Thank you. This is exactly the opposite of what's happening, for example, in places like Mauritania. I saw an interview with the director of the Mauritanian Islamic Bank, and there was absolutely no digital at all. So it was like incredible difficult to make banking, to banking there. I was surprised. And now we have another question. Olivia, you have your hand up.
Yeah. Thank you, Gonzalo. Let's see if the camera works and I can see you or not. Yes. Hello. Thank you very much, Max, for your talk. It was very interesting. I'm Olivia Orozco. I'm working for Casa Árabe. Casa Árabe is a public institution in Spain dedicated to the Arab world, and we work closely with the STF in many issues related to Islamic finance. And I was going to ask you, because we have been following up a lot the problem of financial inclusion in the north of African countries especially. and the issue of the access to credit for SMEs and especially women businesses. And also in that sense, we have been observing some of the challenges and problems for Islamic finance in the north of Africa in the last years. And one of the issues we found, and we have talked about that in different roundtables, about how much the population is familiar with Islamic finance. So because, and in your presentation, you said that many of the Muslim population in Africa is uneasy to use conventional banking. But my question is how much, I mean, I guess, as you said, I mean, Africa is huge, and the differences are very big among some countries and the others. So maybe you can tell us the difference between some countries there, make some of the differences there. But how much do you think people is familiar with Islamic finance in African countries? Do you have any approximation of that? Thanks a lot.
Yeah, it's a really good question, right? I think it's a maybe two parts question on the level of awareness, right? And there's a women component to it when it comes to access to capital and access to finance. On the literacy part, I think the last data that I could think of, and I'll have to double check here, and it was divided into two parts like this: the Maghreb, and then so North Africa, and then Sub-Saharan Africa. So on the Maghreb side, it's actually better known, right? So we're talking about like 60 to 70% of the population that is aware of what options they have. Maybe they don't know where to go to get those options. So they know the nuances between sukuk and whatnot, and maybe some of the institutions, they may know one or two in that country that provides the services. In Sub-Saharan Africa, the number is actually half from what I recall, but this is, I think, about a year or maybe 2 years ago when I was first looking at the gender component of it and like the awareness. And the ISDB, I actually believe it was the ITFC, so the Islamic, the IITFC, the Islamic International Islamic Trade Finance Corporation had an initiative, I believe actually in West Africa, to educate the general population around Islamic finance products. So I'm not sure how well it's gone. I think they probably started around like 2018, 2019, so not a bit before the pandemic. I haven't gone back, I'll be honest, I haven't gone back to look at what the numbers look like, but it didn't look good at the time. Part of it, they weren't just looking at awareness or knowledge, it was also access. So, and I'm reluctant to give you a number, just to make sure I'm not giving you the access number versus the awareness number. Now, when it comes to women, and I believe, it was on one of the slides, and I was looking at it from a SME perspective, right? Like, it's 55% of the businesses in Sub-Saharan Africa that are owned by women, owned or managed, whether in part or in full, right? In the Maghreb, it's a bit less, and that's, right? So things shift a bit there. Same challenge, and in fact, it's harder for women to have access to capital, and part of it is the perception from a bank, from lenders or financial institutions that they may not be able to manage the money, they're not trustworthy, which is fascinating because in other cultures, and that's one of the things that Obama was able to embed in the algorithm, so you could add, very, ethnographic, data points. You could add sociocultural data points to your algorithm. So whether you're a leader in your community, whether you're a church leader, whether you've been part of the cooperative or maybe 2-3 cooperatives, whether you've run a couple of organizations, being able to embed all of that into the application system, or whether it's a fintech or trade tech, or that's something that banks don't do quite yet, right? Something like digital IDs. Again, in many parts of the continent, men unfortunately have, it's more likely that a man is going to have an ID card compared to a woman. And that's something that already kind of puts women in at a disadvantage when it comes to access to capital, because the use case that I made before, digital ID or even identification is one of the key, one of the main reasons that banks use to decline loans or loan applications.
Very interesting. I don't know if there is any other question, because before we had another hand up. Now we don't. Talking about financial inclusion, Max, for me, M-Pesa, you know M-Pesa, of course, is one of the big examples of how technology and an easy way of technology could help to increase the financial inclusion in Africa. I don't know if you know this example and what do you think about that?
I do. M-Pesa in Kenya, and yeah, what we often don't talk about when it comes to M-Pesa is the fact that the Central Bank of Kenya was actually very collaborative and very, very much on board with all of it. So it wasn't just in the telcos, right? And I think I was talking about like creating ecosystem, and the example that I showed had, tech company, telcos, banks, freight forwarders and whatnot. That's how you get it done. It's not just with one or two parties. And I say that so I'll point to that first. The second thing is, this was heavily driven by the youth, right? So by the time the regulator, aka the central bank in this case, caught up to it, it was good that the central bank, reacted positively and moved, went with the flow. I can't remember if it was Vodafone. I can't remember who the telco was. They had invested a lot of money already in it, right? But that's in part because they were getting signals from the users, from the population, like, hey, I'm transferring money every day. I'm paying my bills here and there. So Safaricom, thank you, thank you, Harold. So Safaricom had already invested in it, but they were just following the signals from their clients, and they're the ones that went to the regulators. And I think that's not usually what happens. Like, not everyone's thinking, let me go talk to the regulator and tell them I'm trying to do this thing. What can you do with me? All right. Kenya is still one of the few cases, or one of the few countries where you have that. I think some of the other countries like Ghana are trying to make sure that the governments, are trying to make sure that they're open and engaging with businesses. And to that effect, something that I didn't necessarily spend a lot of time on is the regulatory sandboxes. I was a part of one last year, 2021, and it was amazing, right? Now, some people are reluctant because you're sharing some of the data and some of the information that may be proprietary. So you have to strike a balance between what's going to help build a healthy, prosperous network and what makes you unique and different. That said, I think if you have a really strong product, a really good product, and a strong customer base and customer loyalty, you will keep growing and you'll keep your customer base. But if you're still in a very, in the infancy, you may need to safeguard some of your products and whatnot a bit more, be better than someone that's been solutioning for years and has like a large customer base. So it was in short, it was a almost perfect example, and that's why everyone is talking about it. A perfect example of different parts of the ecosystem coming together and doing their part, like the telcos leading the chart, right? You would have thought, oh, maybe a bank would have done it. No, it wasn't the banks. It was a telco, and then the central bank, kind of stepped in and said, you know what, this makes sense. Let's make it work. Oh, can we actually work with other countries or neighboring countries? And right, the neighboring countries say, well, no, why not? Right. So at that point, it became a central bank conversation, a regional bank conversation, versus a telco trying to navigate those waters, the regulatory waters from one country to the other, and it's just it becomes a pain really fast, even financially. Yeah,
I think we're going to see much more examples like that in the coming years or in the coming months, I think in the Islamic finance industry in general has shown remarkable resilience after the pandemic, and fintech will help to the industry to keep going, and especially in Africa, but not only, of course. So Max, thank you very much for your time. And if there is no more questions, we stop here, and we hope to continue our collaboration. And thank you very much. You are much welcome in Madrid. I hope to see you again soon in Tashkent or in Jeddah or around. Okay.
Or Istanbul. Well, no, but Jeddah, probably Jeddah. Yeah.
Inshallah.
Thank you for having me.
Jeddah is always a very good place to meet. Okay.
Indeed.
Okay. So thank you everyone for joining us today, and we hope to see you again very soon. Right. Okay.
Right.
Thank you all. Thank you all.
All right. Bye-bye.